today's trade management. We're looking at this chart as of yesterday. We believe we have done or are currently still doing an ascending triangle. All right, leg 4A, 4B, and 4C is finished. We were expecting a motive wave here. If we don't have inflation, we're expecting a motive wave. And we had already labeled the 1 and the 2, a 3, 4, and a 5. There was a correction too. So we have a leg 1, we have a leg 2, and we're expecting to break out to the upside. This is not really going to be the case now, we're quite sure. So we're doing an A and a B, right? And we're still doing a 5 swing C, and that A and a B is not even finished. This is going to extend until the market is set how the Federal Reserve will be uh, how the Federal Reserve will really be treating inflation. Are they going to be set on continuation path of the current monetary policy level policies, or are they going to uh, deviate or maybe introduce new measures? We're going to have an A, we're going to have a B, and that B is going to be 1, 2, 3. It's going to be quite extensive before we have a breakout to the upside. And that's what we should be seeing right now when we go live. So we're looking at the 15-minute chart. Shows, of course, plateau momentum, and plateau momentum means just that we're having uh, a correction. The correction appears to have done an A, has done a 1 and a 2 and a 3. We believe now this is going to be leg 1 into B, right? And then we get done leg 2 into B, and we've done leg 3 into B. We are still going to get more extensions of the current correction. If we wish also to extend it further, we can have an E at that point, and we're still going to be doing a B. That's most probable because we have a bounce here out of the level 1. So 1 and the 2, we have a 3, we have a 4, 5, A, B, and C, of course. And then, so we have a higher degree 1, we have a higher degree 3, and we would have a higher degree 5. I can do this. And it is still a trending count, acceptable, of course, as a trending count. A 1, a 2, 3 at that point, then, of course, if we're at a 5. And also accept it as an A, and we get a very lengthy B, and then we're still going to get a C. So, is it worthy of, let's say, doing sideways trading, between support resistance levels? It is very, our bias is that at this point, especially going into the end of the week, higher geopolitical tensions will take over impacting gold prices. It's not just about inflation. It's really about risk adverse atmosphere now in the US regarding uh, economic growth. We just got the gross domestic product numbers released, and they were really very diminished, only at 1.6%. And therefore, should be seeing today a lower stock market, which isn't really working yet. Maybe down the road, longer term or intermediate term, we're going to be getting continuation of the current stock market consolidation. We're going to be seeing risk aversion, and risk aversion is already showing in lower economic numbers and in lower economic projection, will mean higher gold prices. All right, so we are for the breakout, especially on weekends. On weekends, we usually hold long gold, just in case there are any any political aggravations. You see, of course, a breakout into gold. We're long into this current triangle. We are looking at, therefore, holding the long and going into the weekend. We could take a half size profit if you wish to diminish the size and hold the remaining half size across the end of the week. Let's check the momentum picture. So we have splatter momentum on the 15, I believe also on the 30 minutes. Yes, sir, on the 30. everywhere we're gonna look, splattered also, but we have a cyclic stream on the 45, so at least it's a basic formation. We have negative momentum, or at least neutral momentum now on the 1 hour. The 4 hours is most important and going to be interesting. The 1 hour shows a bounce at 2,303, or 2,300 to be exact. The 4 hours is showing a crucial formation and it is developing now to the upside. So I was saying earlier, the 4 hours is a very interesting candle structure. It is really a very interesting candle structure. It shows one of two things. It's either a must, a flag, and a breakout higher, if you are looking at the bullish formation. It is also a bearish formation, if not for the neutral momentum that we're seeing. We're seeing neutral momentum. So why would you consider it's a bearish formation? Because we see a must and we're just seeing some kind of a pennant. So this, of course, would develop, still developing into a pennant, but the fundamentals don't warrant this, and remember that the technical serve the fundamentals. So we're looking like we have a mast, we have a flag, with surprise for break to the downside. Test the 200-point moving average. We know that the last level 3 is at 2,270 and 2,280, over here showing at 2,265. There's possibility, of course, but again, the fundamentals are not supportive of this move because of the current risk adverse atmosphere globally, and also today's numbers are showing economic contraction, which is adding more to the risk adverse environment. And therefore, we will go for a break to the upside. At current levels, I believe after today's release, the market will get to discount that at least it will break higher to do a second head, 2,400. Therefore, we hold our longs if we are not long, and if you think it is worthy of an entry, we could do, of course, half size long, hold it across the end of the week. The best entries would be towards the lower boundary of this ascending triangle. So even if you have a 5-wave structure, we're still going to be doing an ABC into it, and therefore this is really going to be lengthy. So you're also going to break the lower boundary to give us the sense or the implication that the market is going to the downside, and we get something like a bit of a lower head or a double inverted head at 2,290, for instance, and the market moves higher. So our best entry is end of day tomorrow. Our best entry is already 2,300. Support one today. Even doing 2,300 is very close to the lower boundary of the ascending triangle. We could consider to take that entry, hold it across the end of the week, hold it going into next week to 2,400 levels, the market top.